Good evening. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for the evening of Monday, and this is the 17th of April, 2023, 6:05 p.m. Central Time. Well, the stock market did it again. Gets hit, comes back late in the day. What saved the market today was Charles Schwab. Not that they're doing that great. I want to be clear. They've gone to the Fed discount window. They've borrowed a lot of money. They claim they're going to give it back. They did make some money. They lost a lot of deposits. The big question is, are these I can't call them a bank, mid-tier companies going to see worse times? State Street was another one, and it did poorly. It lost a lot in its deposits. And now we're going to get tomorrow, I think it's Bank of America. We're going to get Goldman Sachs. We get Netflix tomorrow, Lockheed Martin, and I think United Airlines. So you got a lot more coming. It will impact these markets. Everybody's going to look. But already, we're seeing that the big banks, Goldman and the Bank of America, they're doing pretty good. Do I know it? I haven't seen their earnings numbers, but I would assume from what I've seen from the other large banks that have come out that the big tier banks, the too big to fail, they're getting the deposits coming to them. And it's the other tiers, brokerage company. Schwab is a brokerage company at the end of the day, and the monies move in and out of it. They make money on their trading, what they get from that. But a big chunk of their earnings is what they make on deposits. And don't forget that. It's very important. If you're watching Interactive Broker, you can see how they're advertising against everybody, showing what they pay versus the other brokerage firms. So we're talking about metals here. And in the metal market, we've had a good rally in the dollar. I read reports over the weekend how funds are plowing into the dollar trying to buy it. Well, I get the logic in front of the May 3rd FOMC meeting, but I don't get the logic after that, because other banks will either do as we've done, pause at some point. I don't know when our point is, but pause at some point, or not continue to raise. But I think that you'll see, like the European Central Bank will continue to raise against the dollar for maybe another 2-3 meetings. It's hard to tell. It depends what their inflation does. Again, our inflation gets somewhat controlled because we're more self-sufficient in energy. Other countries aren't like us, and that's important. Energy prices, as you can see, they took a hit today. Profit taking a bit, probably more in the tune that we've gone through maybe the maintenance period where you turn off, if you will, the refineries. You convert from summer to winter blends or winter to summer blends. And during that time, you draw on stocks and so on. Now you start using products and you start building the stocks, and demand's supposed to take over. The fear people have is if there's a recession, will people stop driving? I don't have that fear. And the reason I don't have it, got to prove to me that people are not keeping up wage-wise, jobs-wise, getting new jobs to the point where they're getting really far behind. Then I get concerned. So get me to that point and I'll be there. The other thing that, now finish up with that. The earnings so far are beats, not misses. Are you aware of that? It's very important to be aware that. I write about it tonight. We keep hearing, and I keep reading, report upon report, as to how earnings are going to turn down. Is this going to be another season where that doesn't happen? Eventually you cry wolf, and there's no wolf. And I'm wondering, just watching each one of the big companies come out, if that's it. My bandage on my head, I'm one of these guys that's watching very carefully this Moderna and this new, if they can twist their vaccine, how it can get rid of melanoma, because that's what I get, skin cancer. I'm so fair. The sun sees me and it decides to give me a blast. And today they took out the stitches that were holding that together. I feel great, but it's just something I go through all my life. I take care of it. All right. In the gold market, you're sitting here and you finished so far. It's only Tuesday's trade. You're down 0.5%, 0.4, and you're down $8. Okay, not the end of the earth. The market's got the highest high and it's pulling back on the daily charts, and you broke the pattern. So you no longer have the higher lows, like here to there, and higher highs. Now you got a lower low and a higher high. So the market has done some damage to itself. The market is fighting a battle at the line in the sand. You hear me talk about it so often. When a market gets over these averages, typically it likes to come back and challenge the 18-day average From there, decide what's it going to do. When it's under it, it likes to rally to it to see what it's going to do. Again, the big rallies, pulls back to it, fights a battle to see what it's going to do. That is so typical as to what this does. When we take a look at the Bollinger Bands, what stopped the market? At the end of this, I'm going to talk about Bollinger Bands. At any point you want, you can click up here, and it'll take you to the area of our website under Education about that course. It is so important. You get up there and you've got to learn that without those on the chart, you'd wonder, well, what's stopping that market? It's not a moving average. You've got the 200, the 100, the 18, not that. But you take a look. And yes, you can latch onto the band, and I explain when that happens. I explain how slow stochastics, if they develop, and they didn't, what happens and how you correct. You either, when you get overbought, you either embed or momentum turns down. If it turns down, what can happen is the market can break a bullish pattern, and that's what we've done. We're back to square one, looking to see what the next move is going to be. In the gold-silver ratio, finally, you're getting a bounce. This is the first real bounce against the silver market, and the silver market lost its embedded reading. Now, let me explain and go into this with you. Here is a market that on Friday, still fully embedded. Look where the market's stopping on the rallies. If you lose the embedded reading, which you did on the close, the odds favor that before you go up and take out that high, you're going to make a run for the 18-day average of closes. And this is where the market's at right now, and I still think it can easily do that. So now with the continuation down, higher, you got the higher high, but a lower low. I should have taken this arrow and had it pointing down, is what it is. Or did that come out? I don't think it did. Want to see? As we step back over here, let's see how far back this will let me go. It will. Okay. This will be interesting if I'm right. The low here is 2469.5. I think I'm right. And the break low so far is 2492. Even with tonight, it's 2492. Did you take out this low? No. So I didn't make the mistake. You have higher lows, higher highs. You're going to say to me, properly so, Ira, but the trend is still up on the swing line. It is. But as the slow stochastic with the Bollinger Band, that course can teach you, momentum often turns before price. And that's what this market is saying. Could it re-embed? Take the course. There's one way it can re-embed right away. I'm not going to spill the beans. In the copper market, tell me where the market stopped again. This is why I push this course on you so much. I want you to learn this. Lower low, higher high, right back and fighting that battle at that number. That's that line in the sand, no trend. Platinum market, lower low, higher high, overbought, got over the Bollinger Band for 2 days. So what? The odds are it's only going to stay over there 5% of the time. I teach you here regularly that each day over it, I take away 1 percentage point of that 5%. It serves me well. When I explain things, you'll see it's rare that you get beyond 5. Can you? Of course. There is no rule that can't be broken, all right? Eventually, they'll even have where you don't pay tax maybe and you don't die. I don't know, but who knows? But on charting, yes, rules can get broken, but you're not playing for that. You're playing for the high percentage that it won't get broken. And you're not betting against the market to come down under that. You're just saying to yourself, hey, I don't want to be a buyer over that. There's a huge difference in how you do that. Now, the market that got very big today to the upside was palladium market. But remember, this is an ultra-thin market, always has been. I like it because you look at it, what platinum and palladium are doing, but I can't remember the last time I told a client to trade this. Last we get to the dollar index, and you tell me that this market didn't pay attention to that number, and then you bounced up, and where did you stop? Right at the 18-day average. Why that number? Because it's the line in the sand. So when you look at Bollinger Bands, you tie them in. I use them in the ETFs, the stock market. I use them in the futures market. If you can chart it, and if it's got the components that you can work with the slow stochastic with the Bollinger Band, I don't see why it can't be applied. How do you learn more? Well, you take a look at this. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.